Good day, traders. 1 minute mindset reset. Today we're talking about something one of my mentors taught me, Bill McLaren, a 40-year Wall Street veteran. And he said that a trend becomes at risk, the most at risk, when it breaks to new highs or to new lows. Now, we talk about this in the playbook. Bill McLaren was the one who taught me that false breaks are the beginning of potentially large and fast moves. So we have talked about this in the previous videos around Christmas time about the opening range of the new year. We see markets now that have had explosive moves on non-farm payrolls and the Fed, and I emphasize the highs and lows of the day, the highs and lows of the weeks, and the highs and lows of the months for 3-day cycles, the breaks and structure. My objective is to make money each day and to target high probability opportunities where the market is about to explode vertically in a long situation, but obviously my bias is to the downside. I like to look for stuff to short, and one of the reasons is that markets tend to go down a lot faster than they go up. We obviously do get parabolic trend trade setups in the long direction. The point of what I'm trying to emphasize today is that it's as simple and complex as you want to make it. When you break to new highs or to new lows, especially the new week or the new month, look for not necessarily to just get in the market, but to understand how the setup may present. We want to see that market either weaken. If it's up high, we want to see the weakness show up, and then the timing window, and then is there major red news on the calendar, and then the levels. Position yourself, manage your risk, and understand when to take profits. If you're still in the front side of a move and it's a profitable trade, perhaps we haven't had our break in structure yet, that may be the first red day that you're trading in itself. You may be trading in the day that becomes the first red day trading signal. The next day is the move that can capitulate, as we saw in gold. Gold's magnified, but it's the same pattern, same profile, same opportunity. And another excellent question regarding 3 session setups. Do we need a signal day? No, you don't, but then understand that if you take a 3-session setup and there's no signal, that it's probably a scalp. If you have a signal day and a 3-session setup, there's a high probability now that you're going to be in a scalable opportunity. And that's where gluing the pieces of the puzzle together, day 1, day 2, day 3, help you understand when you can size in and when you should just be taking the profits, locking it in, and coming back next session, whatever that is for you. You could get a high of the day opportunity in London, and that may be the break in structure for the high of the day sell trade that capitulates in the US session. Depends on the market, the instrument, and the template. So really important to understand. Bill McLaren taught me this, and sometimes it takes a lot of constant pounding before the penny drops. Trends become at risk when they break to new highs or new lows, especially when you incorporate other time frame traders into the markets. Think about that. That triggers other breakouts, not just hitting stops. Everybody's focused on stop hunts. Think about what that does. It triggers new positions into the market. Triggers new positions into the market on the wrong side. So keep focused, stay disciplined, stay on track. 1% better every day. You never achieve perfection. And just because you make a lot of money or you don't make a lot of money doesn't mean that you're not just one great trade away from being back on track or from blowing yourself up. Stay focused, keep it going, keep it growing, and may the markets go with you. Enjoy your weekend, traders.